So if you would, just give us a few minutes of your time and tell us about your business.
Good morning again, everyone. I am Ed Robertson. My company's Home Team Inspection Service. At Home Team, we provide residential and commercial property inspections and what I think is the widest array of ancillary services in the Triangle. In the home inspection realm, we do pre-purchase, pre-listing, very old homes. We do a lot of new construction in this market, and that new construction includes pre-drywall inspections, pre-closing, and warranty. Commercial property inspections, we can do pretty much everything from office condo to light industrial. For ancillary services, the termite, the radon, well and septic, we can do water analysis, mold and indoor air quality, chimney inspections, HVAC diagnostic. We do have the sewer line camera for scoping the sewer lateral from the house to the street. If you've got a really old system or something sketchy with trees, we can take a look at that. Our technology makes the entire process much easier for the agent and the client with 24/7 online scheduling. We've got customer service 8 to 5 weekdays. So you can typically get somebody live if you're just driving down the road and want to quote out the information we need. We can take care of you that way. We've got e-sign on our inspection agreements and online payment capability. We do deliver reports rapidly, usually same day, always within 24 hours. We have a repair request list technology that agents can really streamline their DDRA efforts. I'd be happy to present that one-on-one or come in and do a presentation on that, show you how to use that technology. And you use that from a Home Team app that you can use on any device, laptop, desktop, handheld, anything. Again, like I said, our customer service, 8 to 5 weekdays. In this environment currently, we can provide Zoom based reviews or phone reviews if someone prefers, if they're not comfortable being on site. But we are observing the COVID separation and mask on site to protect everybody. I've also got several technical classes for agents that we provide at agencies, or again, I can do those on Zoom. I've done a lot on Zoom during this period. Classes on home inspection, an HVAC class for realtors, and a radon gas class for realtors. And in closing, I just want to take a minute, thank you all for the opportunity to sponsor this, and also kind of share something with you from my perspective. I'm a member of associate member of multiple associations in the area, and I can tell your staff and your members that RRAR has been head and shoulders through this with informing your members, and it's clear that you work closely with local governments and have some influence there. So I just wanted to share my insights there also. Thank you all.
Thank you, Ed, and thank you everyone for joining us today as we welcome Jeremiah Jackson and Michael Martin for our Loans and Closing Power Hour. Jeremiah is an attorney and founder of Jackson Law. Having practiced for the last decade, Jeremiah has seen both high and low watermarks of the real estate industry. He focuses on his focuses are practiced primarily on residential real estate, the formation of corporate entities for ownership of real estate, the representation of various lenders, real estate purchases and refinances, construction transactions, acquisitions, title curative work, and contract drafting. Mr. Jackson is a native North Carolinian, born and raised in Carolina Beach. He has resided in the Triangle since 1996. He graduated with honors from North Carolina State University with a BA in political science with a concentration in law and political philosophy. Mr. Jackson then obtained his JD from University of North Carolina School of Law. Michael Martin is a producing branch manager at Fairway Independent Mortgage Corporation in Raleigh. Michael attended East Carolina University and graduated in 1997 with a bachelor's degree in business. Michael has been in the finance side of real estate now for nearly 20 years and has won several awards since beginning his career in the mortgage industry beginning in 2002 when he won Rookie of the Year. The following 3 years, he was fortunate to be named top producer before he began to learn more about his um, passion to lead people and got into sales management. Michael has been a President's Club winner each year from 2008 through 2019 during an unprecedented time in the industry. Today, Michael is able to follow both passions of working directly with clients and leading in a sales team to the places that they desire to go with the Martin Mortgage Group within Fairway Independent Mortgage Corporation. Michael lives in Raleigh with his wife Tanya and daughter Finley and their boxers, Maggie, Bell, and Riggins, the Diesel. Thank you both for being here today and sharing your insights with us on the loans and closing world. So take it away, Jeremiah.
Yeah, and we're going to kind of go backwards on this one. Loans and closings is going to be closings and loans this morning. Like he said, my name's Jeremiah Jackson. I think I wrote that biography about a decade ago. So I'm pushing 2 decades in residential real estate here locally, 16 years. Here we're doing over 300 deals every month. I'm really seeing a lot of trends locally with new construction, with refinance, resale, and we'll talk about some of that this morning. But it's just an honor to be here. I'm glad to see so many faces that I know online with us today. I hope you all are doing well. So we'll just get right into it. COVID's kind of been the topic du jour here locally. What to do, not only with agents and what you guys are facing with showings and proximity and this kind of thing, but how do we perform a real estate closing when everyone's scared of everybody else and doesn't want to leave their house and go to an office and this kind of thing. No easy answers to that. But this office has done what we can to make this as inviting a place for even the most fearful of those clients. We sanitize our doors, handles on the hour, any touch points that we envision our clients touching are also sanitized, if not hourly, every other hour. We use disposable pens. So we've set it up to basically, if somebody wants to walk into our office and just show up in front of our glass door, we can open the door. They don't have to sit down. They can kind of scrub in and grab a pen and sign away without touching anything other than that pen that they can, then throw in the trash or take home with them. We're trying to be as respectful of distance as we can. We're all wearing masks here. Anytime we're in front of the client, and I'm not letting folks sit any closer than 6 feet unless they're related to each other. Agents are starting to come back to the closings. I've opened it back up, I'd say, about a month ago, maybe 6 weeks. And I'd say 1 out of 5 agents are starting to come. Some I know have pre-existing issues that would make them more susceptible to COVID, and we respect that, but I don't know that the word's out yet that we really want agents back at the closing table. If you guys are comfortable, call your real estate attorney. Can I come and see you guys? We miss you. It is a very lonely place here this year. I've sent all my staff home in March, and they've trickled back in. We're probably half staffed now with half working from home. But it ain't what it was last year. And we missed the party atmosphere. We missed the good times that come with lenders and agents who have worked so hard to get a deal through the transaction, all the way to the closing table. And we like to celebrate. We like to have a good time. And it's just, it ain't the same. So come on back. You'll find a safe place, and we'll take good care of you. I want to talk a little bit about local lending. So much going on nationally. I think Raleigh and Wake County and Johnston, certainly Johnston, Durham, Orange, Chatham, the Falv County region. You guys heard some of Stacy Anfinson's numbers a month or two ago on how just insane the month of May was over last year, which was the previous record. Volume is way up. Demand is there. Nationally, I saw a lot of lenders kind of go into a shell in February, March. Layoffs, fear mongering, certainly. Big companies planning for the worst case and shedding payroll. Processors, underwriters, those were sent home. And those that were in the office went home in March or April when a lot of businesses started pushing folks to work from home. And some companies got it really good and some companies not so much. And there's been I've seen a lot of hiccups in lending from home, essentially, getting everybody on the same field to push the loan through from application all the way to closing and post-closing and sold to an investor. I haven't seen a lot of national lenders get it right, is what I'm trying to say. And then, that was March, that was April, and then the rates bottom out. And then just the refinance volume in and of itself. I mean, for example, for my office, my record months before were 15 or 20 refis. I just don't shop that. I don't really average it. We've done 60 to 70 refinances for the last 3 months alone. So quadruple our normal volume just in the last 4 months. And I know that's putting a lot of work on those lenders as they were trying to ramp up for spring production and summer production, not fully staffed. And the staff they had might not have had the tools they need to succeed from home. If you catch my drift. So I push all my realtors. Well, I like Michael. I've known him for, 10 years now, and know the quality of what he's doing locally. But if it's not Michael, it's someone like him, an expert in his field, who's local, who's accountable, who knows what's on the line, who wants nothing more than to please every agent every time, never mind the client who he cares passionately for. But you want to find someone like that on your team that you know is accountable, because Bank of Kansas City, Quicken, Rocket Mortgage, they can do a loan, and when things are right, maybe it'll go okay. But that has not been my experience in the last several months with them. So now more than ever, look local, stay local. You don't have a strong lending presence. You need one now. I feel that strongly that you're doing a disservice to your client if you're allowing your client to routinely pick crappy national lenders in markets that are terrible. Right? I mean, this is a macro. We're a microcosm. Nationally, New York, California, some of these big cities, Chicago, it is not a hot market. Obviously, people are fleeing. It's the opposite. So, hang in there with a good local lender, and I think you'll set yourself and your clients up for success. So, digital closings, I want to talk a little bit more about. What I was told when TRID came along, Wells Fargo and the Consumer Finance Protection Bureau, CFPB, shared an office in Minneapolis for a year, maybe 18 months. And together they shaped what became TRID, the rules, the procedures, the forms, what changed our world 4 or 5 years ago. Wells was very instrumental in that process, in that shared office. I think there were 15 to 20 Wells execs and about the same number of federal representatives for CFPB. And they shaped it, quickly, and I think they shaped it without expecting any type of national emergency we're going through now with a 100-year pandemic. We were told by the end of 2018 that maybe 1 out of 4 of our closings would be fully digital. And when I mean digital, I mean not just DocuSign and online and pressing the buttons at the end of every page to show that you've acknowledged the form and you've received the disclosure and you're ready to sign and all this, but to include the promissory note and the deed of trust as a digitally signed, digitally notarized, digitally filed mortgage-backed security that can then be sold next day on the open market. There's a lot of money in it for the lenders. There's a lot of money in it for a lot of cottage industry folks to hang around, settlement shops and lenders. It makes a lot of sense. We were told by the end of 2019 that 100% of loan closings would be fully digital. And it is towards the end of 2020, I have yet to do one digital closing. And not only did they say it like this might be coming, but it was like, this is how it's going to be. And you better shape up and get with the program and sign up for all these different online portals and remote signing support systems, or just retire, because you're too old, you're too much of a fuddy-duddy, you're not going to be able to handle this new wave of mortgage closings. And it has not been the case at all. In fact, in March of this year, Wells Fargo sends, and I don't mean to pick on Wells, but they buy, Michael, is I think something like 60 to 70% of mortgage-backed securities are bought or originated by Wells Fargo. Something like that. It's a huge percentage. So as they say jump, the rest of us kind of say how high. In March of this year, Wells Fargo came out and said that they will not buy an e-note. They will not buy an electronically signed note. And we could talk for 30 minutes about why they won't, but they're not going to do it, and it's not going to do it anytime soon. So I think that's kind of off the table for 2020. But in preparing for all of this, the good local lenders like Fairway, like Michael Martin, like many of the local industry leaders have prepared their systems to comply with CFPB, Wells Fargo, TRID requirements, and they were ready. They were ready at the end of 18. They were ready last year. They're ready now to convert to a fully signed digital experience. So what they've done is taken all the forms as part of their loan package that don't need to be notarized or won't be held or recorded, like your promissory note and deed of trust. They've taken all those blanket disclosures, standard disclosures, redundant disclosures that have been signed before, and they basically made one sweet, 40, 50 page DocuSign doc that is uploaded to a portal or emailed to the borrower the night before or the morning of closing. And that borrower is able just to log right in, go through some credential challenges, and just tap away. And in 5 or 10 minutes, they've signed everything that Michael's explained 3 times before, or they probably be signed before as part of that loan estimate experience. But what that means is they get to my office, and instead of having a stack of paper like that, that stack's closer to 1/2 inch, and we're signing, 10, 12, 14 forms. And if they want to move quickly, we can, I can explain all the numbers, the payment structure, cash to close, itemize every debit and credit on that CD and settlement statement. I can do it in about 10 to 12 minutes, and they can be out of there in 15 minutes. And when you've got, folks who are sensitive to the COVID environment, they don't want to be in my office at the first place. We can cut that exposure level down from an hour, 45 minutes down to 15 minutes and get them out of here without touching anything. It's a real positive experience. And I've had a lot of good feedback on that. And that's all thanks to lenders like Michael and other folks who can get those documents signed ahead of time and keep them out of my office. Back up a little bit. At first, I was doing drive-by closings. That was in the spring. That was in March. That was in April. It was 65 degrees and the sun was shining. I'd rather be outside anyway. But I quickly learned that the car closings are an absolute nightmare. You do not want to be anywhere near that vehicle when borrowers take control of papers that they're worried about and start reading them in the car, and you lose absolute control. It's not going to be 15 minutes. It's not going to be an hour. I have a good friend up the street at a foreclosure mill, or not foreclosure mill, but a high volume residential real estate firm that you've all been to. They had a 4-hour closing in the car in 95-degree weather. There's no excuse for that. It doesn't do the buyer any good. It doesn't do the agent any good, the realtor. Everyone's angry and frustrated, and no one's listening or learning after an hour. I can tell you that from experience. So if we can get folks in our office like we've done, or send a notary to their home and join by video call, I think we can still bring that tailored, professional end result that you agents are looking for when you recommend a good closing attorney. So that's called a hybrid closing. North Carolina, kind of where we are now. Just real quick, because I know I'm kind of bumping up against time. When COVID really hit hard in March, our General Assembly was out all the way through the end of April. So they didn't get back to the Capitol building until April 28th, April 30th, something like that. And then those slow wheels of progress started churning, and they came out with an emergency remote notary bill that sunsets this month. I believe it's halfway through or at the end of the month. It's coming up soon. And I think a lot of agents, and I think a lot of loan officers and a lot of attorneys were banking on this, keeping folks at home and still having a good experience, and still having a good, well-represented, streamlined process. But it's been anything but. What the legislation allows is for any North Carolina notary to jump on a video call. It could be FaceTime. It can be any number of platforms that are approved by the Secretary of State's office. But you jump on a platform, you join a video call, and you watch them as they sign their loan documents, and they're showing you what they're signing. They've shown you their ID so that you can see it, so that you can verify. You're somehow supposed to discern whether or not they're located in the state of North Carolina. So unless they've got a landmark out the window that I recognize, I don't know where they are. They could be in South Carolina or Europe for all I know. But anyway, once they sign it, they put it in an overnight envelope and send it back to me as a notary. So it's a next day closing. Then I got to take the thing at, when I get it at 11 o'clock, open it, notarize it, record the deed of trust, and get it back to the lender. So it makes a 15, 20-minute process a 1 hour sign, 30 extra minutes of work for the consumer, 30 minutes extra work for me on this end. And it's a 2-day closing at best. I've done it once and it was a miserable experience. And I tried to set proper expectations with the realtor about it, and they were still pissed off about how miserable it went. That legislation was meant, I think, more for elderly, those that truly were at risk, not just fearful, but they should not be around other people because they're coming up on end of life. And it was meant for elderly to sign do not resuscitate forms, wills, trust, all the last minute is, estate planning that would take place before they were taken to a hospice or a hospital or some other facility. So it just wasn't what it was supposed to be. It did not save anything for real estate attorneys, lenders, or agents locally. I'm on the task force joint with the Mortgage Bankers Association, the legislatures, and of course the real property lawyers to start drafting a lasting fix. I can't tell you how long, I can't tell you when that's going to be. It's going to be a while. And I think a lot of this is kind of looking at the election in November and figuring out who's going to be in power locally in North Carolina. So not much is going to happen anytime soon. Probably the winter, probably the spring is my guess. And so we talked about digital closings. We've talked about hybrid closings. We've talked about what the notary can and can't do. I'm just going to get in the way basically with the statute as it reads. But I think the best is, where do we want to go as an industry? I've been doing this 16 years now, and I've been doing it with agents for 12, 14, 16 years. We have a damn good rapport. We can sit down with a good lender, with the agent at the table, and if something comes up, 99 times out of 100, we can work right through it. And regardless of who made the mistake or what happened, we can not spin it, but we can bring it back to what needs to be done, the fix, and provide a customer with a good experience. I don't know that we can do that sending remote notaries to people's houses. I don't know that I can give the same service for a web link like this. I've heard some agents really upset that they sent their client to a real estate closing to a local attorney to watch a TV screen from a lawyer in Charlotte that works for a different law firm. And it's not important who's doing that, but that's what's coming if we go down the route of cutting attorneys out and go into a settlement shop type situation like in Virginia, Florida, New York, this kind of thing. It will.
I just wanted to jump in and kind of add on what you're saying. I think what you're talking about is just, you speak so much to the importance of having a great team that you work with that's of local people, right? Where you as the attorney can reach out to the lender when there's a challenge, obviously the local agent. And you just lose all of that when you either go to this title thing you're talking about, right? Like other states, or working with companies that are just not local and don't have the accountability piece.
If a problem comes up like that, you're absolutely right. If a problem comes up like that, where I don't have the camaraderie or familiarity with the lender and their underwriting and their processing, it ain't going to close today. It might be tomorrow. But 9 times out of 10, I can send folks to lunch. Michael and I put our heads together, and when they get back and their belly's full, the last 5 documents are ready to sign, and they're happy. If everything's going to be a last minute or next day approach if we go to that notary model, and you're going to see it's going to become a minute clinic of attorneys in a box talking for 10 minutes to people they don't even know, they don't really care about. They've got 4 more that hour. anyhow, I'm gonna get off my soapbox about that. That's kind of all the material I had this morning. I know Michael's got some good stuff coming up, so I'm gonna turn the floor to him, and then we're gonna open it up at the end for any questions that you guys have. So again, thanks for having me here. It's a real honor to be in front of you guys, and I present to you Mr. Michael Martin with Fairway Mortgage.
Thank you so much, Jeremiah. And to the rest of you guys, some of you guys I know pretty well, some of them I do not know at all. I'm going to open this up. You guys have the ability, I believe, to unmute yourself. If you don't, put it in the chat feature if you want to ask a question. I want to kind of open up more of a dialogue versus me just kind of shouting information at you. If you can unmute yourself, just go ahead and do that when you're ready to ask a question or jump in with a comment. If you cannot, make a note in the Zoom chat, and I know I have the power to unmute you. So I cannot say enough. It is being a lender here for 18 and a half years in the Triangle. I think maybe if you heard my intro earlier, my mom was a realtor for 30 plus years. My dad was a builder, developer, architect for about 30 plus years as well. So I literally grew up in this industry, in this field. And as someone who's been in it for this long, and I know there's folks that have been in it way longer, but as someone who's been in it this long and had the experiences and gone through the number of helping number of families that I have, literally over thousands, I will tell you, communication, open dialogue is so important to having a great transaction, right? To having a client have a great experience. And that ultimately is what we're all looking for, is having them have a great experience so that they can tell their friends and family how easy it was to work with us, or what we overcame to help them get to their house that they're looking for. And having great partners on the real estate side, and then of course on the real estate attorney side and lending side, I think really, if you look at the top producers in the Triangle, you'll see that they have great relationships with folks that they work with. They don't look at Jeremiah as a vendor or their lender as a vendor. They really look at us as partners. And frankly, we also take them and their business as our partnerships as well, and want to learn more about each of these individuals and how we can serve them and their clients better. That's how we get to the end game of again, having raving fans to where they come back to us over and over again, whether it's for refinances or purchases, or of course, referring their friends and family. So I'm going to jump in and talk about some challenges. Again, you guys feel free to jump in with questions at any time, but I'm going to talk about challenges, and then I'm going to answer those challenges with some opportunities. So those of you that do know me are not used to seeing me with this funny looking mustache. This is my COVID stash that I just started to grow in a couple weeks ago, because I just felt like I had to do something different. Hopefully y'all won't make too much fun of it. I have some challenges that I want to talk about. Every one of these things are something you guys are aware of, but what we're going to talk about afterward is the opportunities to how we can overcome these challenges. So first is tight inventory. No doubt about it, you guys are all aware that we have the craziest, tightest inventory that's ever happened. Let's see if I can let that person in. There we go. As of this morning, I checked MLS, and we have 5,047 homes that are on the market active right now. That is the lowest I think I ever saw. Brian Payton noted last week, I think we were at 5,011 homes, so we're slightly above that for stuff that hadn't yet gone under contract for this weekend. Just a little bit of perspective, 2009 and 10, when we had the highest inventory ever, we were about 19,900 homes on the market. So 4 times what we have now on the market. So of course, those were different times altogether, but it's important to know just the limited inventory is causing challenges. So we're going to talk about opportunities here in a little bit. Second is appraisal challenges. With limited inventory, of course, causes great demand on the houses that are on the market. And of course, most of them are going for over asking, unless the seller was absolutely unrealistic with their list price to begin with. So how do the appraisers keep up with that? We'll talk a little bit about that. More importantly, how do you inform and keep your clients prepared for that? Number 3 is guideline changes in mortgages. So when the market went crazy really starting in February, but then carrying over into March, lenders were freaking out. Forbearance became a word we hadn't heard of in the mortgage business in years and years, and it caused a lot of panic in the mortgage world. So guidelines tightened up pretty sharply with a lot of lenders, most lenders. including Fairway. Now, Fairway, if you've ever heard of us, we've become a pretty good presence here in the Triangle, but we're one of the largest national lenders, but we operate very much on an independent level. So we're a Fairway Independent Mortgage Corporation, which means I get to handle my office and manage it like I see fit. I can hire people as need be. By the way, we're always looking for help. So if you happen to know some great processors or folks that would like to get into the mortgage business, I'd be happy to chat with you. I put my contact information in the chat. So if you feel free to grab that. If you happen to know people, I'm sure Jeremiah, you're probably hiring as well. I don't know, but we're always looking for great talent, great people. Guideline changes, again, getting back to that. Fortunately, and we'll talk again more about this here in a minute. Fortunately, most of the guideline changes have reverted back to the normal. There's a couple pieces that we'll talk about that are still challenges. FHA and VA, we are limited to 620 credit score. So if somebody's below that, we have a great plan to help them get up to the 620. At the moment, when you think about the volume of loans that are being done, frankly, we can't do them all anyway. So it just makes sense to do better, cleaner loans. So folks that are below 620 need to work on getting their scores up above that. There are some lenders, I'm sure you'll find, that will do stuff below 620, go down to 580, but I think they're pretty few and far between at the moment. Forbearance. Again, we mentioned that briefly a minute ago. There's forbearance on the mortgage, and then there's forbearance on other consumer debt. So we have to address on how that's impacting, and we'll discuss that here shortly. And then I think another challenge is every lender, appraiser, inspector, attorney, every one of these folks, including a lot of you real estate agents, are busier than they've ever been in the history of the world. Nobody can hire as fast as we need to based on this increase in demand. So you want to prepare not just yourself, but your buyers, your sellers, for the reality of it takes longer to get an appraisal today than it used to. It can take longer to get an inspection than it used to. I strongly advise to not close the last 3 or 4 days of the month if you can avoid it. I strongly advise on avoiding closing on Fridays if you can avoid it. There are a lot of moving parts, as you all know, but buyers don't quite understand this. Sellers don't quite understand this. And if you prepare them to not close at the end of the month when everybody else is trying to close, and not close on Fridays, so that if for some reason there is an issue, and there's a number of places, I will tell you from a lending perspective, it is rare if ever we move a close date. We just don't move closing dates unless there's something rare that is occurring that's outside of our control. But there's a lot of other reasons why close dates can get moved. And you want to prepare your buyers by not setting up for failure with a close date on a Friday or the last 3 or 4 days of the month, if you can avoid it. Jeremiah, would you agree? Is that, you guys typically see massive amount of volumes on Fridays and the end of the month?
Every Friday, every month in, and I scratch my head. It's not the customer service experience you would want. We do our best, but it's you and 25 others on a Friday, with domino closings and this kind of thing. So yeah, right on there with you.
It's just simple preparing your client, right? This is if there's nothing else you guys pick up from this call, I'd love for you to just not schedule at the end of the month and not schedule, especially during this crazy volume. Now we get back to normal. It's really not that big of a deal, but when you're dealing with the kind of volume, as a lending institution last month, we closed $6.2 billion in loans nationally. There are a lot of mortgage companies that don't close that in a year. Fortunately for us, we're very much focused on purchase business. We were still about 60% purchase, 40% refi, but the industry is well opposite of that. The industry right now is about 75% refi, 25% purchase. So those are things I want to leave with you on challenges. One last one is, and this is very important, I think, to you guys specifically, is the lack of traditional networking. You're not having the normal parties that you'd go to. You're not hanging out with pools with large groups of people. You're not attending social events, which is a lot of times where you get your leads and your referrals. So you've got to think outside of the box on how you get that. Now, if you're not busy right now from a leads perspective, you need to, there's some things we're going to address on how you can overcome that. But most of the people I've talked to that have a database have been in the real estate business for 5 years or more. are busier than they've ever been, making way more money than they've ever made. So we're going to talk about how to utilize your database here shortly. Opportunities. So we're switching over to opportunities. So going off of our first challenge, how do you compete in multiple offers? So a couple things I want to prepare you guys for, and some of you may be doing some of these, some of you may be doing all of these, but I want to make certain that at least I bring some things that I've seen be helpful. First thing is, you and the lender you work with have to prepare your buyer to be aggressive. When I'm doing my buyer consultation, which typically takes between 45 minutes and an hour, I do that via Zoom for every single client. If you're not working with a lender that's not doing a full consult, you need to think about switching to one that does. There's a lot of things that come up, and if they're not prepared, they can certainly find themselves in a bind when you get into a multiple offer situation, which is almost every offer situation there is today. So prepare your buyers to be aggressive. What they may feel like they are overpaying in price, they are more than likely saving way more than that in interest costs, right? The way interest rates are right now, their cost is going to be saved immensely over the life of the loan, or certainly the life of the time that they're in that home. But if you're not preparing them for that, then you're going to have to deal with the losing offer after offer. And then you could have buyers, I'm sure many of you have, that just give up. They're just tired. They don't want to deal with this crazy competition. Secondly, there is make sure that they are fully pre-approved. If your buyer has some pre-qual letter from some mystical bank out in cyberspace, it is a waste of your time and theirs, and the sellers for that matter. You want to make certain that they're working with a local lender that fully pre-approves them. Now that means we've not only pulled credit, but we've gathered their documentation, their pay stubs, their bank statements, their tax returns, their W-2s, their driver's license, everything that we can have that an underwriter is going to need to make a decision so that we know that we're not going to run into a snag after they've got under contract and wrote a check for due diligence. Losing due diligence money is no fun for anyone. So get them fully pre-approved, ideally with a local lender that you trust, not that you've worked with before, not that someone that they found on their own. You want to make certain that they're working with someone you trust, at least from a pre-approval standpoint. Now, after they've gotten pre-approved with a lender you trust, then they can choose whatever lender they want, but at least have them speak with someone that you know and trust. When your offer is presented, one of the things that I always do, and this is consistent, when an agent reaches out to me and says, Michael, by the way, I never give a generic pre-approval ever, ever, ever. I never say this buyer's qualified for up to $350,000. Let me know when you get under contract. We make our pre-approval letters specific to the offer when the offer is being made. So the buyer's agent typically, or the buyer, typically the buyer's agent, will reach out to me or my team and say, the Smiths are ready to make an offer. We need a pre-approval letter specific to this. And I'll ask, what's the purchase price? Or excuse me, I will ask, what's the address? I will ask, what is the offer price? And I will ask who the listing agent is. Now, when we do our pre-approval letters, by the way, I can prepare one. If we've already pre-qualified the client, I can, by pulling up my app, we've got a Fairway app. You guys can't see this very well, but, and I can click on the client's name. They've already in our system. Show you here in just a second, hopefully. Once I pull up their name, I can click a button, and within literally 30 seconds, I can prepare a pre-approval letter specific to their file, and that sends it to you with my signature on it, and then you can utilize it to forward with your offer. Of course, right now it's going to act like it's not thinking. We'll show that here in a second. We make it specific to the offer. So if they're pre-approved for $350,000 and you find something at $300,000, we're not going to let the seller know that they're pre-approved for $350,000. We'll make it match the offer. And then I'm going to ask who the listing agent is. Okay, sorry, we got this pulled up. So I'm just picking up a client here in the file, and then I'll show you real quickly how long it takes to write a pre-approval letter for me. And of course, I don't have to have my laptop with me, which is also extremely important. I'm going to ask who the listing agent is, and then I will ask you as the buyer's agent, who have you, or when have you submitted the offer? Or to text me as soon as you submit the offer. And then I'm going to personally call the listing agent. By the way, here's what my pre-approval letter looks like. And I just hit that send button at the bottom, and they've got it in usually 30 seconds from when they've requested it. So I'm going to call the listing agent once the offer is presented, and I'm going to sell the financing aspect of the offer. Now, if there are 5 offers on the table and our buyer happens to be pretty close to the top, especially if I know the listing agent, we got a great chance of winning this offer. We won 2 last week specifically because I called the listing agent. We're not going to win every one of them, but it's certainly going to give your buyer a little bit better chance. As again, being a lender that's been around for 18 plus years, I happen to know a lot of the listing agents in town. And if I don't, frankly, it's a great opportunity for me to introduce myself to them and show them the services that we offer. So that's a couple ways to help prepare for limited inventory. Preparing your buyer for a low appraisal. This is extremely important, right? We do not want to get a low appraisal and cause the buyer to be off guard. When you make an offer, of course, hopefully you're doing a CMA so that we have a good idea that it should appraise. And maybe if it won't, why it may not. As a lender, when I do my consultation, I go through this piece and explain, here's what happens when you make an offer. Once you get under contract, we're going to order an appraisal. That's going to be back within 10 business days. We used to be 5 business days. Our numbers show 8.3 as an average for Wake County and Durham County. I tell everybody 10. When the appraisal comes back, we're going to forward a copy of the appraisal to you and to your agent. If there happens to be a challenge with the appraisal, i.e. there's either a repair that needs to be made, which doesn't happen very often these days, or the appraisal came in lower than your offer price or your contract price, here's how we're going to deal with that. You want to go through that with the client before you write an offer. Typically, honestly, I think you should do that when you're doing your buyer presentation, and probably remind them of that when you do your offer. If it's not fun dealing with a low appraisal and everybody wants to blame either the lender or the appraiser for this, but in reality, the market's moving very quickly. It is damn near impossible for the appraisers to keep up with the values. That being said, I'm surprised. I'll be very frank with you. I'm surprised. Out of the 135 closings we've had so far this year, I think I've had 4 appraisals come in low. So it doesn't happen as often as you might think. That being said, if it does happen, I'd rather my buyer be aware and prepare so they've got a strategy on how they're going to handle this if it does happen. 3, let's see, guideline changes. As I mentioned earlier, there are some challenges with guideline changes, but in reality, frankly, there's not much difference today. We've reverted back to mostly everything. What you want is a lender that will work with your buyer to help prepare them to get ready. Not that's just going to say, sorry, you don't qualify, see you later. We never, ever, ever want our buyers to feel that we don't care about them, even if they don't qualify yet. We want to make certain that we're giving them a plan on how to get ready. Now, we're going to be realistic on that plan. If their credit is in shambles or they just started a self-employed company, we're going to tell them it's going to take 1 year to 2 years to 3 years, depending on what's going on. But we want to give them hope and give them an opportunity and help them get there. Forbearance, we talked a little bit about that. There's 2 types. You've got the forbearance with the mortgage. Now, if you've had a mortgage, they did change a rule originally where you had to have 3 months caught up on time. That has actually changed back. That is not a requirement right now, at least not for us. So I think that we're following Fannie Mae and Freddie Mac guidelines to where you do not have to, as long as your report shows no lates, you're fine. If you're trying to refinance, you do have had to make 3 payments and get caught up. The next one is really about there's a lack of networking in this market. How do you get leads? I'm going to propose 3 ways to get leads. If you're a newer agent, I think there's a ton of value of joining a team, of being a part of a team. Typically, teams provide leads, they provide strategies, they provide a lot of tips on how to become successful in the business. I work with some great teams here in the market. I think that's a great way if you're a newer agent and don't have business or in a lack of business. This is a great way to take advantage of others and leverage others' experience. The second way I think is to utilize your sphere. Now, if you don't have enough business right now, you should be absolutely reaching out to your sphere. You need to have lists created for you to call. I'm going to share with you guys kind of a list of what we utilize. I'll send it to Betsy and have her forward it to you guys. Feel free to reply to me or send me an email if you have further questions about it. But you want to create lists and have call strategies for each day. And then you want to be calling your sphere, your database. You want to be texting them. You want to be mailing them, like snail mail to them. You could do things like letter of the hearts or evidence of success, things that show them that you are succeeding and how you're succeeding and how you can help them. And then, of course, video. If you're not utilizing video, it's a great way to stay in touch with your database, at least on a monthly basis. People, believe it or not, if they like you, they like seeing your videos. So you want to, you have to kind of get over yourself if you don't like to look at yourself, because that's what they see anyway. You want to make certain that you get comfortable doing videos either on Facebook or on, via, I use BombBomb. Different tools like that are great ways, I think, to be able to communicate with your sphere and ask for business. Let them know you're not too busy to help them and their clients and their friends. And then lastly, of course, you could buy leads. But I would only, this is a last resort in my opinion, I would only buy leads if you had the capability of responding to those leads immediately. I think everybody knows that if you let those leads wait 15 minutes, you've probably lost a chance to them. They have to be responded to immediately. Otherwise, I think if you're not able to respond immediately, it's a waste of resources. Lastly, I'm going to talk about the power of reviews. We have been blessed. We used to never get reviews. It was really frustrating, and I wondered why, but I wasn't coaching and training my clients to do those. So now it is part of the process. When I'm doing my original consultation, I'm going to let them know how the process works. I'm going to call them to tell them when their file is clear to close. Typically, that's a week before closing. And at that time, I'm going to ask them, how did my team do in taking care of you? Frankly, I expect you to tell me that we've done fantastic. If we haven't, I need you to let me know. I can't fix a problem I'm unaware of. Most of the time, they do tell us, you guys were amazing to work with. So I will then ask them if they wouldn't mind doing a review. We will send them a link. I've created a web page called reviewmichael.com. Feel free to check it out. There's 4 different spots where people can do reviews on Yelp, Zillow, Google, and Facebook. And we just ask our clients to do reviews for us. And we also use social survey. So we've been getting a lot more reviews now. And of course, people are all, it's amazing. I'll ask people, have you guys Googled me before deciding to work with me? And almost at least half have said, yes, we saw the reviews. It looks like your team does an amazing job. So that's what I've got. I guess lastly, if I'm talking anything at all, I just want to talk briefly, like super short, about the market and what's happening with the bond market. If you guys hopefully can see this screen, this is the bond market, the mortgage-backed securities market for the last, I think this is a year. No, this is 6 months. So you can see what happened earlier part of the year. This is when the market went nuts in March. And then we've bounced back and slowly rates have continued to get better. As as the bond prices have increased, interest rates have hit new lows continuously. All you really need to know for this is we expect this pattern to continue. I think we'll have a little bit of a bounce downward in the next week to 2 weeks. So I think rates could go up here in a little bit, but we expect, frankly, a pattern after that for rates to get to all-time lows again. We personally believe, the folks that I pay attention to and read are seeing that we will have low interest rates through next spring, possibly even the following spring. The Fed has announced that they are not changing or lowering the Fed funds rate, rising the Fed funds rate till at least 2022. So we think rates are going to be this low for a long time. So that means you need to be prepared to help manage this low inventory, help your buyers and sellers through this, and you'll have a lot of success. Any questions for Jeremiah or myself?
I think there was 1 or 2 that came up in the chat section. Do you want me to read them, or can you?
Oh, I see them.
Yeah.
Thank you. Okay, so for me, do you do mobile closings? This would be you, attorney, got a prearranged place to compete the closing. So that's really not about me as much as it is about the attorney. I'm going to let Jeremiah talk a little bit about that. I think he mentioned that before, that he's done some of that, but mostly prefer people come to your office. Is that correct?
Yes, sir. I did a lot of that back when I first started out. I've got 3 offices throughout the Triangle now. The downside with mobile closings is the assumption that what I have in my hand in my file is perfect and nothing changes. And if there's any last minute hiccups on any document, I'm kind of hamstrung, and it's always a delay and it looks really unprofessional. Never mind the mindset of the client who I hope looks at a real estate attorney as a professional. And just like they went to the dentist last week to get their teeth cleaned, why is the attorney coming to me? Is this legitimate? Is he that desperate? That's been a tough kind of vibe to overcome. Short answer is yes. If there's a medical need, if they're homebound. I mean, I've done closings in hospice. I've done closings in hospitals, nursing homes. It can be done, but as a rule, I don't offer them. It's favors for existing or referring agents to me.
Yeah, I think that's smart, and I think you're right. There's got to be rare circumstances where it makes sense to do that. Barbara asks, what's the problem with using a pre-approval letter for an amount above what the offer is on a home? Doesn't it show that you are more than qualified? So the answer is possibly, or possibly gives them more information, the seller, especially if you're not in a multiple offer situation, that it might give them too much information. That being said, that is exactly why when offer is made that I call the listing agent to let them know that the buyer is extremely well qualified. So that they know we're not going to have any problems getting the closing to the table. That's a good point. Some buyers, in fact, a lot of buyers and a lot of agents tell me they don't want a number on there because of that, unless it's going to match the offer price. Now, our app, in order for me to use my app to get a pre-approval letter out, I have to put a number in there. So I always just have it match the offer. Now, if the agent wants 2 or 3 because they're thinking about negotiating, it takes 30 seconds times 3 for me to get 3 of them out. So it's not a problem at all. We can get multiple. I will make sure you do have my contact info. It's at the top, and you may come in afterward, but I'll put it here right now.
And Betsy, while he's doing that, would you mind sharing our contact information with the group that participated later on today? Thank you. While Michael's doing that, he talked about appraisals earlier. I've never drafted more addenda regarding appraisals than I have in the last couple months, particularly in this multiple bid, 10 people bidding on a house and it's drawn up, $8,000, $10,000, $12,000 above asking. We can craft, and I do this, literally every day or two, I'm drafting something. We can craft the addenda to have the buyer pay the difference between the low appraisal and the sales price. We can make the buyer pay up to a certain amount, say $5,000 cap. And after that, it's a negotiation. Do they want to pick up the rest? Does the seller want to chip in? We can have the seller meet them halfway. Expectations, I think, in that first meeting about how competitive the market is, about what to prepare for, no replacement for proper expectations set with the client are easily headed off later in that process through proper contract drafting. I've also doing a lot more escalation addenda, pros and cons to it. Obviously, the con being you can't see that other offer that agent swears they have. But if you've got a client that is willing to take the risk or they've been burned 4 times and they just need to get in a house, it is a good tool. I would love to talk to you about it. I don't draft it for everybody. I want to hear the situation first and see if it would apply to eliminate any liability off of you.
Leslie, Jeremiah, Leslie's asking a question. Says, you're drafting the addenda when the offer is presented or once the appraisal comes insured? I imagine this is to compete in a tough offer. You're putting that when the offer is submitted in most cases. Is that correct?
Yeah, exactly. When the offer is submitted, have the conversation with the buyer. Look, you're the fourth person to bid on this house. There's a good chance it's going to come in higher. What are you willing to pay? What are you willing to pay to stay in the game, not to have to do this again, to really win this? Because that could be the difference at the end of the day between a strong pre-qual letter, a heartfelt letter about how they've been burned for 3 separate deals that fell through. That extra oomph in that offer could put them, over the finish line here. Oh, and how quickly I do these. I sit here at my computer all day from 9 to 9 Monday through Friday, and I bang this stuff out. If I have to do it in, an hour, I can make arrangements. Generally, I know, I can get it done. If not during that day, that night before I go home.
Any other questions? Thank you, Mary Rachel. Appreciate that. happy to share with you guys. Certainly, I will get the contact information from Betsy for the folks that were attended and send you guys my contact information. Jeremiah probably do the same. Just know Jeremiah is one of the best, if not the best, closing attorneys I've ever worked with here in the Triangle. I know he'll take great care of you. If you haven't worked with him, I would ask you give him a shot. He's got an amazing team of attorneys and paralegals and some couple different locations around town. So that's very helpful for a lot of folks. We would certainly be honored to have a conversation with you personally, either via Zoom or at coffee, to learn about your business and how we can help serve you. We're blessed to partner with some great agents in town, but we're always looking to partner with folks that do want to grow their business and want to create raving fans.
Thanks so much, Jeremiah and Michael. For everybody out there, we also record this and it's in our library on our website.
Wonderful. Thank you, guys.
Thank you
Thanks,
so
Beth.
much.
Thanks all.
Thanks, guys.